In this video, I'm going to be talking about Rich Dad, Poor Dad. Yes, this book I have in my hand. You may have heard of it. It's a very famous book published on financial literacy, and it's one which catapulted Robert Kiyosaki, its author, to international household status. No, today I won't be reviewing the book or providing a summary of it. You'll be able to find it on other websites. Instead, I'm going to be sharing with you one very important concept in this book. My name is Jim Tay and I'm a property consultant based in Singapore. This is the same concept that I've shared with many of my clients to help them achieve their property investment goals. Are you interested to hear more about it? Keep watching. First, in a statement that made everybody upset, Robert Kiyosaki said that your house is not an asset. What then is an asset? Let's look to Google for the answer. First, Google defines an asset as a useful or valuable thing or person. A second definition, that is what I call the accounting definition, states that an asset is an item of property owned by a person or a corporation that has value and can be used to meet debts, obligations, or legacies. Not very helpful, isn't it? Robert Kiyosaki then goes on to explain how the rich become rich and why the poor usually tend to remain poor. Well, the rich, they acquire assets, whereas the poor, they acquire liabilities thinking that they're assets. Now, your house is one of them. It may sound exceedingly simple, but the truth is most people do not know the difference between a liability and an asset, unless maybe you're an accountant. So today, I want to clear this up once and for all using this very important concept taken from the book. On my left are 4 boxes. At the top, your income, your expenses, your assets, and liabilities. Simply put, an asset is something that gives you income, okay? And a liability is something that gives you expenses. So taking that and going back to the statement that your house is an asset, think about it for a moment. If your house is an asset should be giving you income. So is your house generating income for you? I think for most of us, the answer is no. With our house comes a debt, which is the mortgage on the house, and in fact, this mortgage is what makes an expense go out every month in your monthly repayments. Hence, your house with an existing mortgage is in fact a liability. Even if you say that no, my house is fully paid up, I don't have this debt mortgage anymore. Let's take it away. Still, when you own a house, even fully paid, there are expenses associated with home ownership. Minimally, you'll have property tax. Likely, you'll also have maintenance fees. All of which fall into the expense column. This is arising from, once again, your house. Therefore, remember, as long as your house is not giving you income, but is instead giving you expenses through whether it's your monthly mortgage payment, your property tax, maintenance fees, whatsoever, your house is considered a liability. Please remember that. Now, that's the bad news that Robert Kiyosaki shared with the world when he first published this book and made this very bold statement that your house is not an asset. There are, however, ways that you can turn this around and make your home into an asset. Method number 1 is if you're fortunate enough to stay in a house that has multiple rooms which are unused, you can rent your rooms. This would provide income from the tenants who are paying you rent every month. If your rental income then exceeds your expenses, congratulations, your house is now an asset. The second way is to sell your house. Cash out sales proceeds as income. However, then you still need a home to stay, right? But as long as the next house you buy is less than this sales proceeds amount, you keep the remaining as income. This is what older couples normally do in a process known as downgrading. Now, what about after you've downgraded? The house you're living in is still a liability, isn't it? And with that, I want to share with you the third method, and this is the method that I usually plan for my clients to help them balance their liability with an asset. And the way you do that is by owning at least 2 properties. One of each is your own stay property. For reasons explained earlier, is a clear liability. And the other is an investment property. One which gives you income via rental. This rental would be able to cover the expenses associated with your own stay home, such as property tax, maintenance. Conceptually, this is how it works. Let me illustrate it to you more clearly with the use of some numbers. Assuming 2 properties of the same value in Singapore worth an estimated 800,000 each. With the house you're staying in under the liability column, resulting in expenses of estimated property tax, $80 per month, maintenance of $350 per month, assuming it's a private property, and mortgage expenses, mortgage of $900 per month. These are your total expenses which come from owning your home. It's about $1,300. That's the amount that's draining out of your pocket every month in order for you to live in that house. Certainly, for the second property, even though it's an investment property, you still will incur property tax, maintenance fees, as well as mortgage expenses, assuming you take a loan on it. So let's say that that is also equivalent to $1,300 thereabouts. Your total expenses for both your investment property and your own stay property would be $2,600 per month. Well, that sounds like a lot of money. And reality is, the moment my clients or anybody hears about this idea, this is a step where they freeze and think, wow, it's $2,600 a month in expenses to own 2 properties. Can I afford it? Can I afford these expenses to go out of my pocket every month? However, you need to remember that this investment property, although yes, it is giving you $1,300 in expenses every month, it is also at the same time giving you a rental estimated of $2,000 per month. Doing the math, your income now is $2,000 per month and your expenses from both properties is $2,600 per month. That gives you a net figure of expenses worth $600 per month. This $600 per month reduces your expenses by more than half if you were just to own a single property for your own stay. You get what I mean here? The moment you actually have an asset investment property that provides income, more often than not, in fact, I'm very sure that the numbers would make it that the net expenses you have at the end of the day is going to be less than the expenses if you only had 1 property for your own stay. If you have the funds for additional assets, additional investment property, all the more better. You can turn a net expense to a net gain, a net income month after month, even though your own home is liability. Live small, invest big. Great, isn't it? That's not all. Having multiple properties also helps you in the long run, because unlike in the first example where if you sell your property, you need to downgrade, the beauty about this is in future, if you still need to cash out from your property, you won't need to downgrade. You simply sell one of your investment assets that you already own. Well, I've come to the end of this video and I hope it has helped you to understand how your house is a liability and possible methods how you can change this and turn your house into an asset. But wait, before you try something on your own, remember that real estate is a large ticket item which costs hundreds of thousands, if not millions of dollars. It's a double-edged sword, and you need to know what you're doing. Used well, your home is one of the best assets which can produce great income and wealth years into the future. Not handled properly, it can also cause financial ruin. If you want to learn more in detail about this, on how you can leverage your existing house into that future income producing asset which can last you for years to come, including your retirement years, I've prepared this property retirement cheat sheet that contains great information, tips and steps on how you can move towards a comfortable retirement using your real estate. Just click the link in the YouTube description below, enter your email address, download it. Remember to like, subscribe, leave a comment, ask me any questions you need. I'll see you in my next video.